Hello traders and welcome to another video review. Today is Wednesday, the 13th of December 2020, and we are going to take a look at the Forex calendar, and then of course we will do some technical analysis. So let's just swipe down towards the Wednesday, and as we can see, there isn't many of the high importance events for today that are going to be released. There are some medium events. One of the most interesting one is the one from the Switzerland. It will be released at 9 o'clock. As you can see, it's a KOF economic barometer, and as the forecast is 101.4, and this is lower than the last reading of 103.5. So if there is any sort of a further deterioration below 100, then of course we'll have appropriate reaction on the Swiss franc. There are other data from Switzerland to be released today, like retail sales and the ZEW survey economic expectations. As you can see, the deterioration of this indicator is quite visible because the market participants expect only 15.8 points, while the last month reading was 30 points. So the deterioration is like a half. So if there is a number lower than 15, then of course the Swiss franc reaction will be kind of a violate, I guess. The other data will be released during the New York session, and what do we have here? 2:30 goods trade balance for the month of November, and wholesale inventories. Quarter to 4, there is a Chicago Purchasing Managers Index. As you can see, there is slight deterioration here, 56.6 points, while the last data had been released at the level of 58.2, so there is a deterioration here. Pending home sales, 4 o'clock, of course, and for those of you who trade the crude oil, we got the crude oil inventories 4:30 and 7 p.m. Barker Huge US rig count. So those are the data for the Wednesday, and as you can see, the New York session will be much more busier than the European session. Nevertheless, I think we should take a look at the pairs related to the Swiss franc. I think the Euro Swiss franc would be a good idea, and some pairs related to the American dollar. So I think we will take a look at the American dollar to Japanese yen. I think that will be a good idea, and then gold and of course crude oil. So let's just do the technical analysis. Euro to the Swiss franc. So what do we have here? We are still trading below this trend line here, the orange trend line. The market tried to rally a little bit higher than this, but it failed, and still the last high, which is at 1.876 pips, is still not violated. I mean, it was hit, but the market didn't close above it. As you can see, we got this pin bar here, and then we got, of course, confirmation of the pin bar. So we have another daily candle close lower than the close of the pin bar candle. And today, of course, we are still waiting for the candle to close, but right now there is a little volatility. The market is waiting for the data to be published, and then of course we will see what will be going on. Nevertheless, in the long term, we still trade below this key trend line resistance, despite the fact that market had bounced and broke out of this black channel, as you can see here. Then we have some test, and we are keep getting higher, but as long as the level of 1.876 pips is not clearly violated, there is no daily candle close above this level, then of course we cannot actually expect the euro to rally and the Swiss franc to be sold across the board. I think we might enter the horizontal kind of a cycle where the euro to the Swiss franc will be trading just between the levels of 1.876 and 1.748 pips. So this is like a 100 and let's say 50 pips range, and I think this is the best plan for the euro to the Swiss franc for the next couple of weeks. So that's the euro to the Swiss franc. As I said, we need to take a look on the American dollar to Japanese yen because of the data that are going to be published. So what do we have here? As I said before, the recent developments on this pair didn't change much because we are still under this long-term trend line. We are still making lower lows, as you can see here. The bounce, if occurred, is shallow. The recent one didn't broke above 104.02, which is one of the key short-term technical resistance. We got this pattern here. As you can see, we tried to bounce, but then the next candle closed way below the previous candle close, and then we got the confirmation for today. So it looks like we are heading even lower towards 103.20 and then 102.88 pips on this daily time frame chart for the Japanese yen. So the outlook is still bearish, nothing changed, no major breakouts. We continue the downtrend. Gold. What is going on the spot gold market? Very interesting candles we could see recently. I mean this one, and of course let me just move my arrow, and I mean this one. Those candles are indecision candles, which means especially this one is indecision candles. The market doesn't know where it wants to go, up or down. It's not really certain about the direction. We got some sort of the pin bar, some sort of the even like a shooting star, but it's in the wrong place apparently, but it looks like a shooting star candle. And as you can see, every time we try to go above the $1,900, above this level, then of course the market is being sold heavily, and bears entering the market, pushing the prices lower. So this might be interesting level. I will just let me just copy it and put it on the chart. 1,900. It can be interesting level because any candle close above this level, this is a daily time frame chart, I would like to remind you, will mean that we are going towards $1,965, and that's a serious target because it's $65 higher. So that's a nice room to grow if 1,900 is violated. So please keep in mind this. This level. The other level worth to keep an eye on is of course between 1,865, 1,848. This is the main zone right now for all of the traders. Right, it used to be bearish. Right now it might act as a demand zone, of course. So we can see some kind of dips here and then bounce, dips here and then bounce. And if this zone is violated, then the next support is seen at the level of 1,817. So please keep an eye on 1,900, the key level right now for the traders. And let's take a look at the last chart, which is a crude oil. And as you can see, since yesterday, nothing changed that much. Of course, our scenario is still in play. So what do we expect? We expect the market to come off these levels sooner or later, and especially come off the level of 46.26. If this level is violated, then of course we can drop towards 46.85. Eventually we can bounce a little and then break lower. If this scenario will manifest, then we have a head shoulder price pattern, which is a very negative pattern for the bulls because it's a kind of a reversal price pattern, and the traders should expect the market to go basically lower and especially below the level of 46.85 on the crude oil. If the level of 46.26 is not violated, then of course we can go a little bit higher, and the key technical resistance is 49.29. The other one, as you can see, is 50.64. So please keep an eye on this one as well. Right now we are trading in a narrow zone between those two levels. As you can see, this is daily time frame chart. I would like to remind you again. So please bear in mind that that we are waiting for the breakout on this market. As you can see, the momentum is still positive. The momentum is still strong, but not that strong as it was while the market was testing the $49.29 dollars. So range trading, waiting for the market to decide which way it wants to go. If it goes lower, then please pay attention to the possible head and shoulders price formation on the daily time frame chart of crude oil. That's everything for me for today. Thank you very much for watching this analysis. I hope you guys will have a good trading day, and I hope I see you guys tomorrow for the last video review of this year 2020. So take care guys, and see you tomorrow. Bye bye.